Hello everyone, welcome to the Ichimoku.co daily futures market review for the trading day ending Wednesday, October 5th. Moving firstly to the bonds, the US 30-year bond futures, and here we see a continuation of the trend to the downside today. This current candle forming a lower high and a lower low. Market selling off from highs around the 170 level, finding support today down below the 165.27 area, an important previous area of support and resistance. The formation of an indecisive spinning top type candle does suggest that there is potential for a change of trend back to the upside off the back of this indecision now entering the market after the strong selling of the previous day's trading. If we do see a change of trend, looking to strong resistance, firstly at the 166.21 level, which held as resistance today, and then if the buyers are strong enough to trade up through there, the 167.15 has been an important area of resistance in the past, and also the Candlestick indicator trading at the moment just above there. It should move probably slightly lower and be still around this 167.15 region, so potentially some strong resistance there where we're likely to see the seller return back into this market if we don't see selling for this next day's trading. If we do see the market trade down through 165.27, looking to support around these swing lows around the 164.17 area. Now, importantly, in terms of trend, Ichimoku, we have a bearish market in all three timeframes, trading below the cloud, below the Kijun-sen and the Tenkan-sen, and that negative trend is supported by the Chikou span, which represents momentum. So we have downside momentum significantly in that medium-term time frame. So the likely scenario here is that we could get a bounce. We'll bounce to around this 167.15 level, and then we're likely to see the sellers resume in this market if that area holds as an area of resistance. And just moving to the bands here, and importantly we find support coming in at that lower band, so that's going to be a benchmark for this technique moving forward. It's around the 165.24 level. Support coming in there suggests that the market could bounce, and if we do bounce, we'll be looking to the middle of the bands around the 167 area to hold as resistance. If we trade up through there, we'll probably end up trading up to the next band, the top band, around the 168.17 region. But just looking for a breakout as well down below the lower band. So if we are going to see a significant downtrending activity, we want to see a strong bearish breakout with some follow through in the market taking out this area around 164, that low that we were looking at on the Ichimoku chart, that swing low. Moving next to gold futures, and following the very strong selling of the previous day's trading, we see formation of an indecisive spinning top type candle. It does suggest that there is potential for a change of trend to the upside. Today, support coming in down below 1266.5, resistance coming in at 1273, and following this long black body candle, we have a small body, so net momentum to the downside has decreased. And we have indecision with this downside price rejection and upside price rejection. The problem here for any potential uptrend, and there is a possibility of an uptrend, and as always we require confirmation, but the trading day from the previous day has been an extreme candle. And when we see these extreme candles with these large range and these large bodies, either black or white, we don't tend to see strong follow through. And what we see is the market relax, usually indecision. The failure to rally significantly after this suggests that the buyers certainly aren't showing any strength, and we do tend to see more selling after this type of candle. So this suggests that, and as always, we require confirmation. So our benchmark is going to be this 1266 support level, and probably down around the lows here of this current candle, 1264. If we see strong negative price action down below here, which is likely, then we certainly could see gold futures trading down to around this 1250 area, where we're likely to find some solid support. 1250 has been an important level in recent times. In terms of trend, trading down below each of the Ichimoku indicators, strongly supported by the Chikou span, just starting to look a little overextended in depth away from the cloud. So if we do see a bounce, we could see some attempt for mean reversion, but we are likely to find resistance around this 1284.9 level if the market can trade through 1273. And just looking at our bands here with gold futures, and we are trading well down below the bands, and importantly in the middle of the bands, looking overextended. So it wouldn't surprise to see a bounce here. So if we do see the market rally, we will need to take out that high of that candle to form a higher high and a higher low, and looking to strong resistance to come in at that lower band, which trades around that round number 1300 at the moment. So we are likely to find very strong resistance around there if the buyers do come into the market. Moving next to NYMEX oil, and here we've seen NYMEX oil rallying to this all-important $50 level. 49.90 is a level just below that $50. It has been an area where the market has previously retraced from. If we look at some of the retracements back towards this $50 level, they have been significant. And in October last year, the market rallied to that region, sold off very significantly down to the $26 level. The last time we were trading just above here was in June, earlier this year, and we saw a sell-off down to around the $40 level. So here we are rallying to this region, and the market has interacted with this $50 level pretty much. Today, 49.97 we got to. We have seen some rejection, but we have seen the buyers continue with control. So there is an opportunity for the buyers to trade up through that area. The extent we could trade to could be up to around this swing high, which is around the 51.67 level. So if we do break out through there, we could see a couple of more days trading, and then watching for any significant selling to come in, where we could see the market sell off. Importantly, a bull market in all three timeframes, supported by the ticker span, and as we've seen with a lot of the markets, futures markets, we are seeing some solid trending activity in a lot of them at the moment. So good opportunity for traders. At the moment, however, I'd say that the opportunity here has probably been lost with NYMEX oil. We've seen this market rally off this area around the $45, $46 level off the Kijun-sen and Tenkan-sen. Importantly, if we do see any retracement, looking to support to come in at the Tenkan-sen indicator around the $47 level. And just looking at the bands here with NYMEX oil, and here we see the market trading well up above the bands here, and just looking overextended in depth of price action away from the middle of the bands around the $46 level. So it wouldn't surprise to see the market retrace. Any retracement is likely to find very strong support at that upper band at 48.15. But this solid bullish trading above the upper band does suggest that we still do have a very strong bullish tone in this market in the medium-term time frame trend. And if we do see a retracement, we're likely to bounce off that band and continue to trade higher.